Alternative investments. Alternative investments focuses on non-traditional asset classes that provide diversification, inflation protection, and differentiated return characteristics relative to traditional equity and fixed income investments. Candidates study commodities, real estate, publicly traded real estate securities, and hedge fund strategies while evaluating their role within diversified investment portfolios. The curriculum emphasizes the unique risk-return profiles, valuation approaches, liquidity characteristics, and economic drivers associated with alternative assets. Understanding alternative investments is important because institutional and high-net-worth investors increasingly allocate capital to these assets to improve portfolio efficiency and reduce dependence on traditional market exposures. Candidates develop analytical skills used to assess investment performance, evaluate risk exposures, and determine the strategic role of alternative investments in long-term portfolio construction. Commodities and commodity derivatives form a major component of the curriculum and introduce candidates to the characteristics of energy, metals, agricultural products, and livestock markets. Candidates study commodity production cycles, spot and futures pricing relationships, and the effects of contango and backwardation on investment returns. The curriculum explains theories of commodity futures returns and analyzes the components of total return from collateralized futures investments, including spot return, roll return, and collateral yield. Candidates also examine commodity swaps and the construction of commodity indexes used in passive investment strategies. Understanding commodities is valuable because commodity prices are influenced by inflation, geopolitical events, weather conditions, and global economic activity. These concepts strengthen the ability to evaluate inflation hedging opportunities and diversification benefits within investment portfolios. Real estate investment analysis is another significant area within alternative investments and focuses on the valuation and investment characteristics of commercial property markets. Candidates study economic drivers of real estate value, including supply and demand conditions, rental income growth, interest rates, and property location factors. The curriculum explains due diligence processes and valuation approaches used in direct real estate investing, such as income capitalization methods and discounted cash flow analysis. Candidates also analyze real estate investment indexes and examine potential biases associated with appraisal-based performance measurement. Understanding real estate investments is important because property assets often provide income stability, inflation protection, and diversification benefits. These concepts strengthen the ability to assess property investment opportunities and evaluate the role of real estate in institutional and private portfolios. Publicly traded real estate securities, particularly real estate investment trusts, receive extensive attention in the curriculum because they provide liquid access to property markets. Candidates study different types of REITs and learn how to value REIT shares using net asset value per share, price-to-FFO ratios, price-to-AFFO ratios, and discounted cash flow models. The curriculum explains the importance of funds from operations and adjusted funds from operations as measures of recurring property-related cash generation. Candidates also compare publicly traded real estate securities with private real estate investments in terms of liquidity, transparency, taxation, and diversification characteristics. Understanding REIT valuation enables investment professionals to assess property market exposure while benefiting from the liquidity and accessibility of exchange-traded securities. Hedge fund strategies represent another important topic within alternative investments because of their flexible investment mandates and diverse return drivers. Candidates study equity hedge, event-driven, relative value, opportunistic, specialist, and multi-manager hedge fund strategies. The curriculum explains how hedge funds use leverage, derivatives, short selling, and arbitrage techniques to pursue absolute returns across varying market environments. Candidates also analyze hedge fund risk exposures using factor models and evaluate how hedge fund allocations affect traditional investment portfolios. Understanding hedge fund strategies is important because these investments may provide diversification benefits and reduced correlation with traditional asset classes. However, the curriculum also highlights risks related to leverage, liquidity, transparency, and manager skill dependence when evaluating hedge fund performance and investment suitability. Overall, alternative investments in CFA Level 2 develops a comprehensive understanding of non-traditional asset classes and their applications within diversified portfolios. The curriculum combines valuation techniques, risk analysis, portfolio integration concepts, and market structure knowledge to strengthen investment analysis capabilities. Candidates learn how alternative assets behave differently from traditional investments and how they may improve portfolio diversification, inflation protection, and return enhancement. The topic also reinforces the importance of liquidity analysis, manager evaluation, and risk management when investing in specialized markets. Strong understanding of alternative investments enables investment professionals to construct more balanced portfolios, evaluate complex investment opportunities, and better manage long-term investment objectives in evolving global financial markets.